Namaste and welcome everyone. You're watching India Tonight. I'm Ashish Palik, joined by my colleague Sumita Karir. Of course, lots lined up on the broadcast on India Tonight. But let's begin with our top focus this hour. In an enthusiastic display of festive fervor, India shoppers unleashed a staggering 68 billion spending spree fueled by Prime Minister Narendra Modi's bold GST tax cuts on nearly 400 everyday essentials. In fact, sales skyrocketed over 8% year-on-year during Diwali and Navratri, topping 6 lakh crore rupees on everything from glittering jewelry and electronics to, in fact, even cozy furnishings and sweets, which is, of course, a vital rebound after US tariffs threatened to dim the economic glow.
Absolutely, Ashish, and that's big news. However, the big question really that we're asking tonight on the show with our panelists is, will this consumption boom sustain given the slower income growth that we've seen and, of course, weak labour markets, which are still a cause of concern? Let's then go across to a stellar panel of guests who's joining us tonight to decode some of these questions and concerns. We're now joined by Mahesh Jaisingh, who's a partner and indirect tax leader at Deloitte India. Also joining us on the broadcast is Manish Singhal, Secretary General, ASSOCHAM. Thank you very much, gentlemen, for taking the time out and speaking to us here on ET Now. Let me come to you first, Mr. Singhal. We'll talk about the concerns later on about the questions, but first let's address how critical is this figure? How critical is the fact that the festive season has done so well, given the time at which it is coming when the world economy faces uncertainty on the back of tariffs and, of course, geopolitical disruptions that are currently happening? How likely is this sort of consumption boom that we're seeing, how likely is this to sustain in the long term?
We have to look at this festive boom in this perspective of a series of reforms which have been happening since the beginning of this calendar year, I would say. We started with tax rationalization for the individual taxpayers. Then we had the 1% rate cut by the RBI to boost credit flow, and of course a lot of monetary policy easing. So this has to be seen in that context. So it is expected that this momentum will continue for a longer period. We are seeing it as a short-term gain vis-a-vis last year, but yes, a little bit of pent-up demand, because after Prime Minister's announcement on 15th August, people did expect major saving on account of this indirect tax.
Right. A quick follow-up question on that to Mr. Mahesh Jaisingh here. Mr. Mahesh, India's e-commerce sector, like my colleague here, of course, just said, it has witnessed its biggest festive shopping spree ever. Sales in 2024 festive season accounted for 1 lakh crore rupees, and now there's been a 20% growth this year. Now, the basic question here is, are Indian households now genuinely richer, or did they just stretch their credit cards for this Diwali?
Well, I think it's a mix of both. I think like Manish said, from the beginning of the year, it's been a reform year. I, for one, kept calling 2024 as a GST blockbuster year. I guess I've been proven wrong. This year has been a bigger blockbuster in terms of the rates and the consumption, and therefore the consumption that has been increased. If you go with the GST collections, you see a 4.6% year-on-year growth, but that proxy is not the most critical one for us to look at, because that represents a month of September, which 21 days was under the earlier rate regime, and post 22nd, when the rate started dropping or dropped, that's when the consumption increased across different sectors. But for me, I'm more curious and I'm more excited about the October GST numbers, which we'll know only towards the end of November. And I do think that based on the data that you shared, whether on the e-commerce front, whether on the overall consumption front, as well as what we've seen on the auto sales gone up by 17%, these three data points clearly suggest that the next month we will see a tax buoyancy. This tax buoyancy increase will not be proportionate to the entire increase, because the government has taken a bold call to reduce the rates of taxes. But on balance, I still think the growth momentum of GST will still be buoyant, as well as the consumption pattern should continue.
Right. Let me ask you a follow-up question, Mr. Jessing. You essentially state that this consumption pattern is likely to continue, but what we have seen on account of the GST rate rationalization exercise, whether you talk of e-commerce platforms or traditional retail platforms, there have been rate cuts that, in addition to the GST rate rationalization, that, of course, brands and companies undertook to woo the consumer and, of course, to ride on the sentiment of this GST rate rationalization exercise. On that front, is this sustainable in, let's say, the next 6 months from now?
Well, this is not the first time that we've had festive season sales, whether e-commerce or offline. And therefore, it's an annual pattern if you were to say that there are, all retailers and others give good pricing, as well as it's been a double whammy with the rates. Let's not forget that the e-commerce sector is not necessarily one where I would buy a car or, other product, but there are multiple other daily use products or, aspirational goods, which many of them have had a tax rate cut. So did that result in, an impetus of an accelerator or catalyst sale? Perhaps yes. But I don't think that it's only a blip in some sense, because like I said, it's year on year that during the festive season that you walk on the, the shopping bazaars, as well as you go on the online platforms, you will see, all brands investing a lot to be able to enhance their sales. So I think it's a accumulation of both. It's not that these price reductions that you and I as consumers seen was once in a, we've never seen it before. That's something that has been there, but the GST was the icing on the cake this year.
Absolutely. In fact, continuing on the point of e-commerce that you're talking about, Mr. Singhal, now the growth of e-commerce has without a doubt been impressive on paper, but beneath the surface, there's also a war brewing. If you look at the data closely, traditional e-commerce platforms are struggling with moderate growth, while quick commerce is exploding at 8 to 10% rates. Do you expect this to be a pattern, a small little pattern that we see this festive season, or do you think the shift away from the traditional e-commerce model will continue in the next seasons as well?
See, the quick commerce is probably just an expression of sentiment that, people, once they decide that, okay, we need to buy it, they want it very quickly. So, a lot of this festive demand also comes along with, getting the product quickly. So it's partly a reflection of that. But yes, as we go along, quick commerce obviously will keep on growing, maybe not at that rate the way you saw last few months, but it will continue to grow vis-a-vis conventional commerce. Not that the conventional commerce value will go down, because that has its own advantages in terms of getting a much wider range of products and sometimes also at more competitive prices.
Right, sir. And let me come to you, Mr. Jessing. Essentially, when we talk about this festive season boom, this is something that we see every year. But what's made all the difference this year is, of course, the sentiment with respect to the GST rate rationalization exercise. We did hear what the Prime Minister also stated just ahead of that exercise, those rates kicking in, that he is going to be, targeting the neo-middle class, and he hopes that demand will revive, and well, it has. But in the longer run, if we look at the coming few months, given the fact that there are macroeconomic threats to the Indian economy on account of geopolitical headwinds that we are seeing, what can policymakers do to convert this seasonal consumption boom into a steady long-term engine of a growth? What the kind of policy moves that need to come into effect for this momentum to keep getting sustained, Mr. Jessing?
Thank you, Sumita. I think it's also important to call out that there are really three stakeholders, right, in any tax reform. One is the government, second is the businesses, and third is the consumers. What we saw was a blockbuster announcement and rates, which was by the government for a consumer, and which obviously businesses are playing an important part. One should not forget that there's been a very conscious effort to create a lot of awareness by the government, whether on the GST Utsav, as well as the businesses have played a very large role and have been very responsible in terms of announcing their rate cuts and making it way open to public as to what their revised pricing would be going forward. So these two factors, with the government's push, as I said, the key stakeholder, the businesses, as an ally and also implementing partner to the government to be implementing these rate changes, played a very positive role. Coming to your more pointed question, what should the government do? Well, I wish I could have said there are different thoughts, but I've been helped by the Government of India's press release after Honorable Prime Minister's speech on August 15th, where three pillars were brought out: structural reform, rate reform, and ease of living. Ease of living being, in some sense, ease of doing business. So with rate, you can't constantly have rate cuts, but we've seen a blockbuster rate cut. Structural reforms is something that I expect some more changes in the upcoming GST Council meetings, where certain challenges which are there from a business standpoint, those will get ironed out, which are structural, which could be inverted duty structure, certain interpretations on ITC credits and stuff like that. But to me, let's not lose sight of the third pillar, which is the ease of doing business. As recent as last week, the government had 3 R's within the ease of doing business: returns, refunds, registrations. So you have seen in the press release for the September collections, the refunds have gone up tremendously, which is a good sign, because if tax is due to you, if you're an exporter or there's an inverted duty structure, each passing month we're seeing the rate refunds coming back to businesses, which gets them a little more easier and they don't get distracted with a working capital block. I see that as one pillar of refunds where some more small changes could be done. Returns, it's getting more and more simplified, more and more automated. There could be one-time pain for businesses or challenges, if I were to say, but the long-term and medium-term gains are so many that a real-time reporting is the need of the hour, and India is really far ahead than many other countries on the return pillar, which is the second one. The third subset within the ease of doing business is on the registrations, and we've seen the government do constant changes to going more on a trust-based basis. And we've seen the announcements last week after the GST Council of what the simplified GST registration would be. This is going to positively impact 96% of us as businesses. And I'm bullish that these factors, which may seem like, okay, it's there, it's a compliance thing, but more and more when compliance is really what it is, it's just to comply rather than take over your priority in business. I see that to be able to have businesses just focus on the market, and by default, the cycle of consumption should continue is my assessment.
Absolutely. In fact, we are talking a lot about GST and how much of the festive boom is to be attributed to that. And when we talk about GST, we need to talk about the auto sector, because one of the most visible impacts that it's had is on the auto sector. For example, Maruti's highest ever monthly sales have been recorded. Mahindra's record SUV numbers is what we're looking at. Tata has delivered over 1 lakh cars in 30 days. But of course, we need to ask a very uncomfortable question, which is, once the GST honeymoon period ends and the dealers have, finished restocking, what happens in Q4? Are we setting ourselves up for a post-festive hangover as well?
This is to me.
Mr. Singhal, that's for you.
Okay. So Ashish, we should always remember that second half of the year, and especially the last quarter of the financial year, is always a growth quarter. And we are yet to get the formal growth figures for Q2. But Q1 was excellent with 7.8%. Q2 also, some estimates show as 7%. So, now that, let's say, we got a shot in the arm with all these reforms, this growth momentum is going to continue. Yes, not at the rate at what you saw from 22nd September to 21st October. But yes, it will continue growing because, sometimes these reforms make people think of, buying, consuming more, because they feel that things are much well within their reach. And that's what probably will also in turn encourage the industry to invest more, and also, look at increasing capacities, in turn increasing employments, which in turn would again help to increase consumption. So I think it's a cycle which will continue. Yeah, month on month, you may see a little bit of up and down in the growths.
Right, Mr. Singhal, that's a good point that you've made as far as a month-on-month progression is concerned. But let me come to you, Mr. Jaisingh. Mr. Jaisingh, when we talk about income growth, well, there's been a widening income gap that we've seen across the country, and which is why the recovery as far as the domestic economy is concerned, that has been a bit staggered. You know, when we talk about labor markets, the weak labor markets are still a cause of concern, and which is why I asked you that question about whether we'll be able to sustain this consumption growth because of the fact that this was festive season, of course, but it was largely sentiment driven as well on account of this being the festive season when people generally loosen their pockets on account of, then in addition to that was the GST rate rationalization exercise. But with income growth slowing and of course, you know, the wage gap increasing between the haves and the have-nots, you know, what immediate policy measures can the government take to tackle that as with priority?
Well, I wish I could have given a much more broad-based comment, which I'm sure you're looking for beyond the GST remit. But I'll stick to the GST remit, which is my beat. I think that, you know, clearly there are challenges which are on the economic front and others. I do think that consumption from a pure GST and, you know, law perspective will have daily essential aspirational goods and luxury goods. These are the three buckets that I would view this. When you look at things like cement getting down to 18%, from 28, and construction, if you're building your own house, there's a credit that breaks, and therefore that's a full cost to you. So these kind of reductions, even for some of us who would have deferred a decision to do a construction or deferred a decision to make a buy in the category of aspirational goods, if I were to say it could be a refrigerator, it could be, it's not that we'll buy a refrigerator every day. So I get that, and I don't think that that's what will change by virtue of GST. But there are some products which are still in the aspirational category, which were otherwise unaffordable. And now if you see, you know, not unaffordable or expensive, I would say, certain, you know, textile products down to 5%, footwear down to 5%, so which was 12% earlier. So I think that those products, I may choose to start spending a little more because the loaded cost with a 5% rate as against the earlier rate of 12 or in some cases 18 makes it that it's almost 12% or 10% discount that the government has given me. So to that extent, I'm not getting into the larger trends on consumption, but the consumption of products which are slightly, you know, which will start moving up the price chain because the effective cost has dropped is what I think will sustain over the next few quarters as well, is my take, Sumita.
Absolutely. In fact, Mr. Singhal, you know, a lot of valuations that we're talking about right now are hinging on 2 to 3x growth expectations. But again, we're looking at how much GST has to do with this festive demand. And once it cools off, are you expecting a sharp correction in e-commerce and retail valuations early next year?
See, as far as e-commerce and retail keeps on growing the way we saw in the recent past, yes, the valuations will improve because at the end of the day, if the consumption increases, that has a direct positive impact on e-commerce and retail. So yes, those valuations will increase. Just to answer your question precisely, and like I said a while earlier, we expect this growth to continue for some time, and industry should back it up with higher capacities, greater production, and of course, in turn, greater investment.
Right. Mr. Jaising, let me also ask you about the larger macroeconomic policy. Will this surge in consumer spending and, of course, liquidity that we've seen during the festive season, how is that likely to influence the RBI stance on interest rates and, of course, inflation management?
Well, again, I'll give you another proxy, which I will answer. You know, I did talk about GST refunds going up by 39.6%. And that proxy, the reason I'm sticking to that is working capital has been you know, an area of sometimes concern to businesses. And now more and more when refunds come in, liquidity increases, and therefore we can see businesses being more bullish to spend more and knowing that their GST credits would come back to them in a reasonably quick time frame. So I don't know. I mean, I wouldn't want to comment on whether the rate cuts and what will happen on that front, but we've seen this year to be even a healthy amount of focus and of liquidity, and we've seen the results of that. So beginning of the year, you saw the income tax cut. Middle of the year, I mean, during the year, we saw some of the rate cut, and then we see the GST cut. So I, for one, don't think, you know, there's too much room to continuously do this, but we'll have to see how this unfolds. But me sticking to the GST lane, think that the working capital reliefs have been starting coming out more institutionally and on the back of technology that the government has been heavily investing on, along with certain standard operating procedures, which make these refunds more automated than very subjective with tax authorities.
You can end.
In fact, Mr. Singhal here, the last answer that he gave, he sounded very optimistic about the growth and also the expectation that he has over the next few quarters as well. But we need to talk about the elephant in the room, which is, of course, fashion, a massive consumption category. It's just growing at 8 to 9% this festive season. When you compare it with other categories, for example, electronics, which has grown at 30 to 35%, smartphones 13 to 15%, the growth has been underwhelming. What exactly do you think is the reason for that? And do you see an uptick coming as far as the fashion is concerned?
See, we are having the onset of the marriage season now. So, probably a lot of that buying will happen over the next 3-4 months. A lot of these things also become a little bit seasonal. So while a lot of consumer goods and what we call goodies do get consumed during the festive season, fashion and other such products, happen first of all more or less around the year, and more so during the huge wedding season, which is ahead of us in the next 3, 4, 5 months.
Right, Mr. Singhal and Mr. Jaising, on that note, thank you very much for taking the time out and speaking to us here on ET Now in terms of the kind of festive boost that this country has gotten, our domestic consumption has gotten. And that is something that, of course, the government keeps on reinstating, that despite any macroeconomic headwinds or global geopolitical headwinds, it's India's domestic economy that has remained resilient. And that will, of course, help us wade and navigate these waters, disruptions that are currently going on in the global economy. We have to bet largely on our domestic economy. Well, with that, ladies and gentlemen, it's now time for us to take a look at the earnings corner, because Titan has posted its earnings for the quarter gone by, and it's turned out to be a mixed quarter for the company. Q2 PAT for the company has risen 35% to 1,006 crores, but missed analysts' expectations. Meanwhile, revenue overshot streets estimates, and it came in at 16,534 crores, a 25% higher figure than the same quarter last year. My colleague Snehi Shah is here with the highlights. Snehi, take us through the fine print of Titan's Q2 report card.
Well, yes, overall, if you take a look at Titan's Q2 numbers, mixed set coming in. The revenue is a beat versus our estimates, but if you take a look at the net profit and the margin, a miss, and EBITDA is largely in line. So let's take a look at these numbers on a standalone year-on-year basis. Revenue has come in at 16,534, up a healthy 25%. Net profit is up 35%. EBITDA is also up 43%, but we were expecting this jump to be slightly higher. The EBITDA margin has come much lower than our estimates. We were estimating above 11%. This number has come in at just 9.8% compared to 8.6% on a year-on-year basis. Now, from their press release, Titan says that for the jewelry business, the total income for the quarter grew 21% on a year-on-year basis to 14,092 crores. Healthy move from jewelry. Domestic jewelry business is up 18%. Carat Lane has grown 32% to 1,072 crores. So good move over here. International jewelry business has also doubled, and the domestic jewelry margin continues to be between their guided range at around 11%. It's come at 11.1%, so absolutely in line. Other than this, for the watches segment, that's up 13% at 1,477 crores. Analog watches have done well with a 17% growth, and the segment has added 15 stores this quarter. For eye care, the number is up 9% to 220 crores. They've added 5 runway stores. Emerging business has done well, as guided in the Q2 update, up 34%. The net loss over here has reduced, albeit very nominally, at 24 crores compared to 29 crores on a year-on-year basis. Fragrances are up 47%. The engineering business is also up 112%, so good move over there. All in all, in terms of the management commentary, they've said that Navratri has done very well, and they're expecting to see more impact from the GST Digit 2. But well, yes, overall mixed set of numbers coming in from Titan. A beat on revenue, miss on PAT and margins, and inline EBITDA.
Thank you, Snehi, for getting us all those details. In fact, as far as Tata Consumer is concerned, it has reported strong earnings for the second quarter. Revenue for the quarter rose nearly 18% to 4,966 crore, while PAT also came in at 11% higher at 404 crore. In fact, EBITDA has also risen 7.3% to come out at 672 crore rupees, but margin has declined in fact 133 basis points to 13.5%. In fact, Sumita gets us more on Bharti Airtel.
Absolutely, Ashish, because there is earnings also coming in from other sectors as well. And like you rightly stated, telecom giant Bharti Airtel has reported its earnings for the quarter gone by. It's been largely in line with what the street was estimating. Revenue, however, for the company has beat the street's estimates to come in at 5.4%. It's higher sequentially at 52,145 crores. Profit and margins of the company also were in line with what we were penciling in. Profit, in fact, for the company has risen 12.2% to come in at 6,792 crores, and margins have increased by 41 basis points to 56.7%. Now, talking about Airtel's ARPU, well, that number has increased to come in at 256 rupees in the quarter gone by. And for the company's Africa business, while customer base has increased to approximately 174 million, and revenue in constant currency terms was up 24.2%. Mansi, my colleague, is here with all the numbers. Mansi, so it's been a good set of earnings for a telecom giant Bharti Airtel, and of course the ARPU number that's always been a bit of a contentious number. There's been a lot of back and forth on why ARPU numbers for these companies are not rising. Well, that's been decent as well.
Taking a look at the scorecard of Bharti Airtel, the revenue were above our estimates, the EBITDA was in line, the margins were as per the expectations, and the profit figures were also in line. Like you rightly pointed, the revenue saw an uptick of around 5.4% on a quarter-on-quarter basis. The profit also did see an upsurge of 14%, right from 5,948 crore to 6,792 crore. EBITDA margin was at 56.7% to be precise, and that's exactly what we were thinking in. So it's absolutely as per expectations. In addition to it, the average revenue per user did see an increase of rupees 256. Capex for the quarter was at 11,362 crore. Again, talking about the Africa business, which is an important parameter to watch out for, customer base did stand at 174 million, and the revenue on a year-on-year basis saw an uptick of around 24%. The margins in constant currency was at 48.8%, which is up around 238 basis points on a year-on-year basis. And the EBIT margin, if you see, was at 32.3%, up around 190 basis points on a year-on-year basis. Lastly, Capex for the quarter was at 1,719 crore, and mobile revenue registered a 13% year-on-year growth, driven by high realization and an expanding customer base. All in all, good set of numbers as per our expectations.
All right. Thank you, Mansi, for getting us all those details. Moving on to Vodafone Idea now, which, of course, the shares have rallied in trade. The telecom major has approached the Supreme Court seeking further clarity on AGR dues. And this is, of course, in its fresh plea. Samir Dixit gets us more on this.
A major relief to telecom player Vodafone Idea. Vodafone Idea once again approached the Supreme Court citing an error. In the last judgment of the Supreme Court, there was a paragraph which lacked some sort of clarity, based on which Vodafone Idea approached the Supreme Court. And now the Supreme Court has considered the plea and has allowed that this particular paragraph should provide more clarity. So basically, the paragraph which was raised by Vodafone Idea mentioned that the central government can reassess the additional AGR dues, but not detailed or the entire AGR dues, based on which Vodafone Idea approached the Supreme Court. Now, after the Supreme Court allowing the revision, it simply means that the entire reassessment can be done not just for the additional AGR dues, but also for the entire AGR dues. Now, let me tell you that Vodafone Idea initially approached the Supreme Court citing to quash the additional AGR dues of rupees approx 9,500 crore that was raised by Department of Telecom, whereas the total AGR dues on Vodafone Idea is of roughly around rupees 84,000 crore. But in the last Supreme Court judgment, it mentioned that the plea has been quashed, though the central government can do the reassessment of the additional AGR dues. So this provided some sort of restriction or the border based on which Vodafone Idea approached the Supreme Court, and now Supreme Court has clearly mentioned that the central government can take a call on the reassessment of not just the additional AGR dues but on the overall AGR dues. So this indicates that in the coming days, not just Vodafone Idea but the entire telecom sector can expect some sort of relief that may come in from the telecom ministry.
And well, on the back of that news, Vodafone shares were soaring in trade. But let's now listen into what Mahesh Agarwal of Agarwal Law Associates and also a lawyer for Vodafone Idea had to say on this recent development.
The original AGR dues as determined by the Supreme Court was 58,000. 58,000 included a principal amount of some 17,000 and interest and penalty on interest and penalty. So if the correction is allowed or permitted, then the 17,000 needs to be corrected. Once the 17,000 is corrected, we are hoping it is corrected, then all subsequent numbers will go down. So what will be the real impact? It is difficult to determine now. But if it's a proper reconciliation done, then the amount should go down. Worst case scenario is already there. The demand is staring at our face, which is not a correct demand. So that will stay if nothing happens. And if because of the Supreme Court order which remove the impediment of the government to reconsider, reconsideration takes place, then the amount would go down.
On to some more news now from the markets. It was a flat day of trade on Dalal trade as Nifty managed to stay in the positive territory, ending nearly 25,800. Notably, India VIX, the volatility indicator, spiked by 4% today. There was a lot of action in the individual stocks led by earnings as Shriram Finance was the top Nifty gainer while Maruti Suzuki was the top loser today. Broader indices also outperformed the benchmark with both indices ending the two-session losing streak. A healthy buying was also seen today in PSU banks and real estate stocks. Nifty Realty was the top sectoral gainer today while Nifty PSU Bank also gained over 2%.
All right, Ashish. In fact, Pankaj Murarka, the CIO of Renaissance Investment Managers, well, he expects to see earnings growth Q3 onwards. He also believes that Nifty can give mid-teen returns over 1 year. Let's listen in to what Mr. Murarka had to say on the current market setup and most importantly, as far as earnings growth post Q3 are concerned.
We are witnessing early signs of revival of growth in the economy. And as a consequence, I think this starting third quarter, we will start seeing an earnings uptick. So on an aggregate basis, while FY26 might still report high single-digit earnings growth for the top 200 companies or the Nifty 200 companies, but I think we'll get closer to double-digit growth or about 13-14% earnings growth for the top 200 companies going into the next year, that is FY27. And in that context, I still think that index can comfortably do, mid-teens kind of returns over the next 1 year.
All right, lots more lined up on the broadcast, but before that, it's time for a short break. We'll be right back.
In association